Hey guys, it's Sean at eMiniSchool. It's June 20th. Yeah, we'll just go over a couple charts real quick from last night's update. We were looking at the 60-minute chart on the Russell. Our outlook for the last couple of days has been basing in this level. So we had this high as an area that we were looking for a pullback. We had blue bars, indicator was high, saying that this moved down, most likely over. Look for it to pull up. From last night's email, we had the 627, 629, or 627, 629 level as our upper target for the TF. And after hours, right now, the TF hit 626, so we were about a point off. So looking at these charts, this is the Russell 3-minute of today. Actually, before I do that, we were looking last night. We said we were watching this low to see if this would be a key. If we held this low today, we were looking for that upper target. ES and NQ actually broke that low, but we were only really watching the TF on that level. So today, basically, we had a couple good long signals. Here's the Russell. This green bar is our long signal. Our stop is right here. So taking it long, let's just say at the top of the bar. Let's say you didn't grab it intraday or intra-bar, you just went long right here. Blue bars, indicator low, big move is starting. That was also there right after we got in the trade to confirm that there was a big move starting. So from the top of this bar to here is about 2 points. The trade went 6.7 points, and the market went a lot higher. But if we enter on the 3-minute, we exit on the 3-minute. So it's just a rule we follow. And so looking at the chart, we start getting blue bars and the indicator is high. So we would trail the stop to the low of the bar, the prior blue bar, and we would be taken out right here. It'd be one tick below this low. So we're not really just kind of looking at this saying enter here and exit here. That's kind of impossible, and it's really hard to hold through a trade that long. So we're really trying to just grab the middle of the move and be in and be out. There are other ways we'll look at the end of the video on our scalper chart that once this is going, and let's say you missed the trade, there's alternative ways to enter the trade. So let's look at the ES real quick. Or actually, let's look at the NQ. The NQ is actually a really good market to trade, even though a lot of people don't trade it because they think the point value is too small. And it's true that the point value is smaller than the Russell or the ES, but the moves are very good. And since the commissions are very cheap, you can buy more contracts. And it's a really good way to scale into the winning position. So when you take a trade with the NQs, you can go in with, let's just say, one contract. And if you get stopped on that trade, you're only getting stopped with one contract. But if you enter with one, and as the trade starts developing, you enter more trades on the profitable, or more contracts on the profitable trade as it's going in the right direction, not adding to the losing trade. We don't really want to do that. So it's a really good way to scale in and out of the winning trades and develop the habit of holding longer, because that's really the key. Is after you learn everything, is being able to execute it and hold it to maximum profit potential. It's if you exit for no reason, then you're going to want to re-enter again. It's one of those things where as soon as people enter, they want to exit and then they want to re-enter again. So it's skipping all of that and just staying with what's working and really hold it to the potential. So same thing as the Russell, except NQ's had 3-minute blue bar highs, indicator was low, saying look for a correction. So that was a confirmation to the other markets. So we had a correction pattern. Blue bar's big move is starting. After correction pattern, we're looking for the next green bar, which would be this bar. Even though it's blue, it's still green. That would be our trigger bar. So let's say that you miss this bar and you just play it here. You enter 1803.50. Stop below structure here, which was 3.5 points at 1800. Same thing, it rides up, blue bars start trailing it up. 1824 was the exit on blue bars. So it was about 21 points for that trade. So even though it's less per contract, you can still make a lot of money. And that's 415 for one contract. So, maybe if you're trading three, you take some off with one, take some off with the second, and leave the third. And it's those extra contracts that are you're holding. That's the profit that most people never have at the end of the month, because they're just constantly trading, the same three contracts in and out over and over and over. The risk is too high doing that, in our opinion. So let's look at the 10-minute chart real quick. And we were looking at, on the bigger chart, the contraction, the basing. Okay, so anytime we get to a major level, like right here, it's going to, base out and contract at all major levels. This whole contracting. Okay, so what happens when that happens on the bigger time frame is it gives you less opportunity on the 3 and the 10-minute, because every resistance is going to be resistance and every support is going to be support. And so what we want to do is let the contraction happen and let it test and retest a couple times. Okay, blue bars, indicators low, big move coming. Okay, so once this breaks out, we know no matter what, we are not going to go short. So the direction is clear. Plus our direction from last night was up. We gave the target on the Russell of that 627 area. So let's look at the range chart real quick. So this is the Russell. So this is another entry method that we use. Turbo Scalper Indicator turns the bars green and red much faster. Okay, we're not just trading green and red. We're using it in a specific way for the style that we trade. Okay, so this is a very clean chart. Now with range charts, some people feel like they're getting in a little bit late, but it's a really good way to smooth out the chart. And there's very clean breaks if you're scalping. So this is what we consider the scalper chart. Okay, we're going for like +1, +3 type of trades on the Russell. But like a +3 trade on the Russell is like 6 points on the ES. So, we're not scalping for 2 or 3 ticks. It's too dangerous doing that. So once we get the direction on the 3 and the 10-minute, we only take the scalper in that direction, meaning the 3 and the 10, they both have to say the same thing. If they're both green, we are only going to scalp long. We are not going to try to pick the top and scalp it back down. Okay, the moving averages are just there for a very easy, clean visual of what not to do. Okay, moving averages are both green. Do not go short, because basically once the moving averages go green, the 3-minute is about ready to turn green. So same thing, it comes down, moving averages base out. Okay, even though there's a lot of price action up and down, if you look at the smoothing of the price, it's just making a base right here. And that's a contraction. Okay, and when a contraction happens, an expansion is going to happen next. And that's where the money's made. So the tools that we use give us clues when those things are going to happen. So we're not just trading green and red. It's an overall market knowledge, and then you break it down to specific tools for specific trades to get odds in our favor of what we're going to do. Okay, so if we were scalping long and then we get a blue bar high here, or we're just scalping up to this level, we know to start looking to exit the trade when the indicator's peaking with blue bars. So the 627 was hit, so be aware of that as far as this up move. The bigger picture, we could squeeze out of the wedge to the upside, but there is still one more pattern that we have to get through that's actually a bearish pattern, and we're right near the decision level right now, which would be the next, the opening 30 minutes of tomorrow will be very crucial. See you guys on the next video.